and great training programs, but they have nothing to help you with leads. They have nothing to help you with mentorship. They have nothing to help you with guidance or work-life balance or sort of being the best version of yourself, right? So they just really want your top 10 people you know, and they use you and they spit you out. So growing up in a very small state, I didn't have a lot of access to opportunity. I grew up in Vermont. So when people saw me, they bought the policy because they knew that I couldn't put food on my table otherwise, and then they let the policy go the next year. So there wasn't a lot of sustainability in it, right? And so because I can talk to a wall, and I was trained by New York Life, National Life hired me to work on the sales desk. How many of you have called our sales desk for help before?
Yes.
So that's where I started. I started on the sales desk, and we are, as Mayron calls us, a farm team. So we start at a low position and we work ourselves all the way up to the top, so you better watch out because I'm coming. He knows it, by the way. He knows it. I will be the first CEO. You all heard it first. So I worked my way off of the sales desk, and that's when they asked who wanted to move to California, and I said, me, I'm tired of winter. I live in Thousand Oaks. Everybody familiar with Thousand Oaks? Yes. An hour and a half north, and I only ended up there because my husband grew up there. Otherwise, who knows where I would be. Which means I'm 10 minutes from my in-laws, so wish me luck. So let's get into it a little bit more now that you guys know me. And just so you know, I was added to the PHP team specifically because you guys are on an island in California. It doesn't feel like it, even though there's an ocean on one side of us. The reason I say that is most of your carrier partners don't have offices in California. It's pretty uncommon. And so I feel your pain. I too am on an island. So at 2 o'clock every day, I can't access anybody either. Just like you guys. But the fun thing about me is I know a lot of people at National Life. So they don't mind if I text them after hours or I reach out after hours. And I've figured out the philosophy, which by the way, is if you send the last email at the nighttime, it's the first email in their inbox when they come to work the next day. So you just go on with that. It pays to be on the left coast, as they say. So here is your team. Me, I am servicing specifically California. So you will not see me in Texas or Oklahoma or Florida. I will only ever be in California offices and at the big event. And Mayron was very specific with that because he wanted you to feel that your support was your support and not shared across the country. So this was an ask by your leadership, and here I am. Many of you know Zan and Marco. I grew up with both of these boys on the sales desk. Zan and I actually sat right next to each other and went to competing high schools. High school was way better than this. And then, of course, J-Bug is our Vice President of Sales. These boys will be everywhere else PHP is, but I just won't necessarily be where they are. Okay, so are you guys all familiar with your Summer Sizzler contest? Okay, for those who are not, this is the contest. These are the rules. Another ask by your leadership was to put this contest on the table. Marco worked really hard to make it happen for you, and here it is. So we're looking at June 1st to August 31st in each of these categories. From what I last saw, there's about 16 people in category 2 out of all of PHP. Protect the people you know and love, the people who are around your community members. And by doing so, you get to earn good money, right? No one can cap you. The sky is the limit. And the second thing is you get those cool trips, right? This is the only industry where you get a paid for vacation. Like, I'm not just saying paid time off. Right? Paid time off means I'm going to not go to work for a week and I might still make my salary, but I can't afford to go to Disneyland. I can't afford to go to Hawaii. So I'm just going to repaint my living room. Right? That's what Americans do. Right? And so this industry says, hey, not only have you worked your tail off, not only have you protected all these lives, not only do you get to go on vacation, but we're going to pay for you to go on vacation. And while you're away, your apps are still getting processed and you're getting paid while you're gone. Right? So that's the beauty of what you have. No other industry has that. There isn't one that does this. So you have to take advantage of what's in front of you, and this is one of those things. So don't look at this contest and say, oh, I don't know. Oh, I hope. This is free money. You're not going to get this at the lottery.
Yeah.
Right? The lottery is a guessing game. This is your action creates results. And here are your results. So let's talk a little bit more about National Life Group. I know there's some fans. Woo! But for me, the biggest fan is right here. Because I'm a sponsor. So it doesn't get any better than that. So I want to tell you a little bit about our story. Because I think that in order for you to properly sell and represent National Life, you have to know it the way that I know it. Yeah. And so here's the story of National Life. Who knows how old we are?
75.
176.
Well, now.
Well, yeah, it was last year, yeah. We're almost 177, so be on the lookout. It happens in November. So anyway, we're 176 years old. We're actually 75 years older than, 76 years older, no, 75 years older than Walt Disney Corporation.
Oh, that's good.
People don't realize that, fun fact, right? People don't realize that. We're only 76 years younger than the United States of America. Exactly. Right, 1776, the math.
Right.
So we are really a historic part of the United States that many people don't realize. We first had we were founded in Montpelier, Vermont. This is our very first home office. That building is still standing today in Montpelier. It is a museum. It is not a museum for National Life Group, but it is actually a museum for Vermont agriculture. So this is our current office. We actually only comprise about half of this building. The state of Vermont takes up these two buildings here, and then a parking lot. The reason I'm showing you our current office is because we've only, in our entire history, had 7 home offices. It's pretty crazy. And all of them are still standing. So we made some good buildings. In that time, in 176 years, we've only had 16 CEOs. What does that tell you about our company? What's one word that you think of when you hear those facts?
Loyalty,
Loyalty, longevity, stability. It has been rooted in who we are for the entire time we've been around. And I hate to tell you this, and I'm a woman of facts. I've seen carriers on some of the flyers in the other offices, although I don't see them in here per se. They're out there, out of my purview, good move. Who have been bought and sold, and bought and sold, and bought and sold, no less than 5 times. In fact, they asked us to buy them. Veyron said no, because he saw their balance sheets. So there are people who come to us and ask us to purchase them, because they can't pay, and we can. So loyalty, longevity, who we are, the fabric of our company is inside relationships and inside stability. This is Montpelier. It's actually one of the smallest state capitals in the United States, and there's not one single franchise inside the capital lines. So Vermont is itty, which is why I was on the basketball team, because I was the tallest person in the whole state. And I haven't played since. So let me tell you the story of our very first duck plane. Has anybody ever heard this story? It is on YouTube, by the way. Okay, it's a cool story, and you'll know why in just a second. So as I mentioned to you, when we were founded, we were only in Montpelier, Vermont at the time. So our contract said that if you went west of the Mississippi line and something happened to you, it was null and void. You were outside of the jurisdiction where we can help you. I mean, that makes sense. This is the days of horse and buggy. Like, how do we know what's going on anyway? So just our luck. The very first death claim came from an individual who left Vermont and came to California for the gold rush. Okay, this person got on a ship, went all the way down, all the way around, ended up in San Diego Harbor, and died on the ship from sepsis. Okay, they were outside our jurisdiction. But this was the very first time someone was trying to use this new concept of life insurance. So our founders had a really big decision to make. Do we enact our right to say no because we don't have risk-based capital? Our office was a quarter of this room. It was a desk, a chair, and a filing cabinet. So we didn't even have the money. Or do we do this thing called keeping promises, foreshadowing, and we go to a local bank and take a personal loan and pay the debt claim? Which one do you think we did? Second one, we took out a loan. And by the way, this gets even better, because at the time where this person died, like I said, was San Diego, California was still a territory of Spain. So this wasn't even a person who was in what was considered the United States at that point in time. So we not only kept our promise, we really went above and beyond to showcase that these policies were not too good to be true, even way back in the 1800s. So that story to me is really, really important, because when we say we're gonna do something, we try our damnedest to do the thing. And if we can't do it, sometimes there's regulations, sometimes there's technology issues, sometimes there's things we just can't control. But it doesn't mean we haven't been trying for 176 years to get where we are today. So you can stand behind a company like National Life Group. So I wanted to tell you guys that, because I would like to now show you my party trick. Anybody want to see a party trick?
Yes.
Okay, cool. It's super fun to me, but super lame at a real party. You guys are going to make it happen. Okay, can you see my
Yes.
guinea pig? Okay. All right, Joe, there we go. Got my guinea pig.
I signed up.
Yeah, yes, please. So, she's obviously never done this before, she has no idea what I'm about to do. This right here is how I explain what I do for a living. When people say, why are you always traveling? Why are you always on the go? What is it that you do? You say you talk to people, what is it? It's also how I sell what it is that I represent, which is the insurance policy, right? So once someone hears you're a life insurance agent, they typically don't want to talk to you again. Right? It's not the, they go, oh, okay, that's cool, and they get afraid and they run away, right? So what I do is I take this puzzle. Has anybody ever seen our puzzle?
Yes.
Okay, this is a $1 investment in your business that will probably reap you way more ROI than you've ever experienced in your life, between recruiting and selling. And here's how I do it. What you're selling is not tangible. You cannot eat it, drive it, smell it, or wear it.
Yeah.
So it's the first thing someone lets go of when they have a financial hardship. They let go of the thing they can't see, right? This is how it works. And so I need to make this tangible. I need to make it understandable, and I need to keep it engaging. So one of the first things I'm gonna do, it doesn't matter how I met her, could be a line at Starbucks, could be at one of our kids' soccer games, it could be, a referral. So I'll take the die too soon, and I'll say, what would happen to your husband and your children if you didn't make it home tonight? You gotta get real. You gotta get real with the people.
Yes, you do.
They they'll be very stressed, sad, hardship.
Right. So the answer to this one isn't my most concerning piece, by the way. I'm just getting that conversation going. And here's what I can do with this. She could say, my family's gonna be sad.
Yep.
And I can say, yeah, you're right. Many people go through that unexpected passings are very sad. She could say, I have coverage through my employer. Then I can educate that it's non-transferable. She could say, my parents bought me a Gerber policy, and that's how I got. And then I would say, congratulations, you're part of 40% of Americans who thought to get protection, right? So it doesn't matter, but I can use that.
Yeah.
That's great. Have you ever known anybody in your life, and now I use become ill? Have you ever known anyone in your life who's had a heart attack?
Yes.
Okay. What about someone who has had cancer?
Yes.
And have you ever known anybody who's needed some long-term care assistance or chronic illness help? Now, with whatever time I have, I'm gonna dig into that. Guys, I'm storytelling with her now. I'm creating a heartstring. I'm connecting her to people that are in her life that have been sick or injured, that have impacted their finances. Because it could be her dad, it could be her high school boyfriend, it could be her best friend's sister.
Yeah.
Those people are now gonna come up in her brain like this. And if she was part of any of those financial problems, like saw from afar, she will think of what those people went through. Because right now, at an all-time high, people are remortgaging their house, they're getting second jobs, they're selling their heirlooms, their family heirlooms, they're taking out hardships from their retirement accounts. So by making her think of those people, she's gonna think of those instances.
Yeah.
So then I'm gonna say, but what if I told you that I have access to a product, that I represent a product, that if you don't pass away unexpectedly and you do not get sick, you're going to get your money back. Live too long. You're going to get your money back. And it's tax-free and it's guaranteed for the rest of your life.
That would be amazing.
That's something you'd like to look at?
Yeah. Definitely.
Here's the thing. Millions of dollars go unclaimed every single year in this industry. In fact, it's like $1 billion. You guys can look it up. It's like $1 billion. So roughly $1 billion goes unclaimed. And the reason for that is because the beneficiaries don't realize these policies exist. So it's important to me that before we go any further, I come and sit with your husband as well. I'm gonna be in your area on Tuesday. Do you think the three of us could sit down and talk?
Yeah.
It gets better. Because when I get into her home,
Yeah.
I'm gonna do the damn thing again. Because you wanna be prepared with your illustrations, your sales material, don't get me wrong, but you wanna show him again. Because if you jump right into the sale, then that other spouse thinks that you bamboozled their partner.
Yeah.
They just see it as, oh, they opened the door. They don't see it as the emotional. So I connected with her emotionally
Yeah.
over sadness and trauma and fear. I need to now connect to the spouse, right? That's the very important part. But then it gets really good because I get to say to both of them, you guys travel, right? Travel without your children?
Yes.
Everybody goes, absolutely. Now here's the thing, if you have coma, paralysis, severe burn, and you're away on a trip, who's going to be the guardian of your children? Mom? Is that your answer? Okay, Can I meet your mom?
Sure.
Because millions of dollars go unclaimed every single year.
Wow.
I need to make sure your children get this money and that their guardian knows how to access it on their behalf.
Right.
Can you introduce me to your mom?
Wow.
That's already like 3 people, which is very cool.
It's this recurring thing because what ends up happening, thank you by the way.
Yes.
She's all that. Does anybody in here know the difference between a client and a customer? There's an actual definition difference.
Customer is consumes.
Close. You're getting there. You're on the edge. You're on the verge.
Yeah, customer, consumer,
Consumer, yeah.
and then client is like service? No,
A little bit. You're almost there. So a customer has one product from you. One. It's transactional. You know, you like me today, you're gonna like him next week more because he has a cooler car. That's a customer. It's transactional, means nothing. A client means they're with you. You've got a couple of products together, you're invested in one another. That's a client. That's clients, you know, if you think about the same coffee shop down the street, not Starbucks, but let's say you go to a local coffee shop. You're a client of that coffee shop. You seek them specifically for that coffee versus being a customer at Starbucks because it's convenient to get your coffee there. Does that make sense to you guys? Okay, so that's what this can do though. That's why I bring that up. This creates clients. Because when I have her policy and her husband's policy and her mom and her dad and her sister and her brother and her brother-in-law and her sister-in-law, it's gonna be really hard now for him from Purple and Yellow Company to come in and steal my client. Because if she changes her policy, she has to explain to all these other people why she left me for him. And that's a lot of work.
Yeah.
Does that make sense?
Yes.
Okay, psychology, my friends.
Yes.
Sales is all psychology, really. And love, psychology and love. So, the reason I started with the history of National Life to show you my party trick is because it is not a bait and switch. Meaning, I'm not going up to her and saying, hey, if you have $100 a month, I'll give you that benefit. Okay, super cool. If you can scrounge up $25 more, I'll get you this rider too. And if you give up Starbucks for a week, I can get you this rider too. That's how most insurance is sold. Right? Can we agree on that?
Yes.
At National Life Group, this is why I love my company so much, this is why the history matters, because whether she has $100 a month or she has $1,000 a month, she gets all of this in one product. Do you see how from a compliance perspective, it's easier to sell that?
Yeah.
That's why I love National Life.
Yeah.
Okay,
Can I ask a question?
yeah,
At what point are you doing that with the potential client?
I've done it on airplanes, I've done it in a coffee shop,
Like,
I do it at conventions when people are like, what do you do for the company? I'll say, let me show you it.
Okay, got it.
Right? So that's why I say it can be a recruiting tool. Like if someone's like, I don't understand what a wholesaler for insurance does, I'll say, this is what I do, and I'll pull this out. In a client situation, same thing. Someone's like, I'm not really understanding like why insurance is important. Then I pull this out. If you think it's just a gimmicky product, let's talk about this piece. Let's talk about this piece. Let's put it all together. So it just depends on the environment, and that's why I like it. I think it's really quick. It's kind of like the futuristic napkin sale that we used to do back in the day. It just brings the whole thing to life.
Yeah.
And people enjoy leave the puzzle with the client. They're just gonna give it to their kid or their dog. So it's up to you. But that's what this is what I use the puzzle for. Most people just like to take them off my booth and then do that. To each their own. To each their own. So another thing about National Life, just to kind of keep some more like thought in you guys for like fun facts you can share. So this is actually the slide. This is the first slide Maron shows us every January once we restart the year. By the way, we start at 0. January 1 is like the worst day for me because I get to celebrate success. Because to him, yes, we are a company. Yes, we want to grow. That's the natural part of being in business and being in corporate America. But if you follow your passion and you follow your mission, everything else comes. Right? So if we're seeking people to cover, well, by finding those people, we will get paid commission. But if all we're thinking about is commission, it's hard to find the people. Because you're thinking about, and you're law of attraction, you're attracting the wrong thing. So we had a lot of new customers last year, new policies. But I like these 2 bullet points down here. Total benefits paid, $2.9 billion in benefits from January 1 to December 31 last year. So that's only 365 days. That is death claims, withdrawals, living benefits, and interest put into accounts. Now, below that is specifically living benefits, which again, January 1 to December 31, we paid out over $100 million in benefits. So another company, I get to watch other carriers speak all the time. Another company that I do know you sell, got up on stage one time, and I love going after these people, by the way, because it gives me so much to use when I'm out there. And they all, the people who know me well tend to put me after because they love that I rip on people. But, so they got up on stage, this guy, right? And he was so excited. He's like, guys, we just hit a fifth year, and sorry, not a fifth year. In the last 5 years, is what he said. In the last 5 years, we've paid out $100 million in living benefits. So I got up on stage, and I said, what took him 5 years to do, took us 365 days.
Wow.
Just saying.
Wow.
And again, the reason I get to do that is not because I'm a middle child with parent problems. It's because it's true. It's not bragging if it's true.
Yes,
Right?
yes.
These are just straight facts we're putting on the table.
Come
So
on.
speaking of more straight facts that we're putting on the table, let's talk about the difference pre-COVID.
Really?
Yeah. Where did they go?
Jesus.
Where did they go?
Bankrupt. Bought out.
Bought out, mergers, ton of acquisitions, went foreign, left America completely.
Wow.
Okay, so when you've got 727 companies in general, you scroll all the way down, you've got 110 mutual. What does it mean to be a mutual insurance company? For those of you taking your test, you should take notes on this.
Yes, that's true.
What does it mean?
Is it owned by multiple owners?
No, we're getting there. This is important, guys. This is a big piece.
Multiple investors?
No. So a mutual insurance company means that we are owned, we are mutual, we have been mutual for 176 years. We are owned by our policy owners.
Wow.
So, when we have a surplus at the end of the year, we give that surplus back to the policies. So let me break that down for you. If it costs us $500 million to run our company, between salaries and this and that and the other thing, but if we earn $700 million, profitability of 700, that means we keep the 5 that we need, 200 goes into policies as
Wow, fire. That's awesome.
dividends. So, whereas a stock company, there's 538 of those bad mamma jammas,
Hey.
what do they do with that extra 200 million?
Blow it.
Bonuses,
My
CEOs, jets, trips to the Maldives. They're not putting it back into policies, right? Shareholders, so they're giving it to their shareholders. They are responsible to their investors and their shareholders. We are responsible as a mutual company to our clients.
Come on, that's fire. Yes, that's
We
good.
are governed by a board of directors. So as much as I love Miran, he's a wonderful leader, he doesn't actually make the final decisions.
Whoa.
Don't tell him that.
Hey.
Ego. No, he's actually phenomenal. No, every time he wants to make a decision, he has to address the board.
That's fire.
And the board has to agree that it's in the best interest of the company.
Come on.
And they are not in our industry. They are in tangent industries to us.
Wow.
So they actually get to say, hey, have you thought about it this way? Hey, how will it impact that thing? That's what they're doing. And Miran meets with them every quarter to ensure that we're on the right track and in the right spaces.
That's good.
So, hold on. I was onto something really good in my brain. I know. That right there. Oh, there we go, there we go, there we go. Okay, so another one of your carrier friends, that is not me, recently was in the news. You guys can look it up, it's fact. For firing 10% of their internal sales force, or their internal office. 10%, which is a lot of people. So they fired 10% of their workers. Here's why they did that. In the first 2 quarters of this year, their stock crashed. Because they're a stock company. Crashed. So, I can't say. So, what happens is, in order to regain profitability, they fire employees. Right. Now, if that profitability doesn't go up, they can't afford to fire more people, they're too lean, they can't process business. Guess who gets impacted next?
The policy holders.
Policyholders.
No.
Not you guys. They need you. They can afford to mess with the other people because they won't know.
Yeah,
Because it's in the product, it's in the fees.
Tell us, baby.
You can look it up, you can look it up. It's all over LinkedIn, my friends.
No.
So, and by the way, they have tried, a lot of those people have tried to come get jobs with us.
Wow.
That said,
We're recruiting.
guys, but let's take this serious for a hot second. Here's why. Because you're actively selling these policies right now
Yeah.
to this company who's just done that thing.
Wow.
That in the next 2, 3, 4, 5 years could increase the cost of insurance and expenses on all the policies you sold. And you didn't have a say. Your client didn't have a say. That's just what they get to do contractually, it's their right.
Wow.
So when you choose your partner, your product, you have to think about more than just what the illustration is showing, and more than just what the commission statement is showing, but your reputation and your integrity and your morals.
That's fire.
Right, because that's what's happening throughout the course of your job.
Yeah.
Another example of this is a different carrier who I've not seen on your anywhere.
Hey, we'll give her
They
that.
were purchased by Krispy Kreme.
Hey.
So Krispy Kreme can say they don't like insurance company. This happens every time I do this. So guys, hear me though, hear me really quickly. They were purchased by Krispy Kreme. Again, the agents who work with this company didn't get a say. And they woke up on a Monday, and their policies are now being run by a guy who's only ever done donuts.
That's crazy.
That's crazy.
Right? So, who you do business with matters.
Let's go.
Now you guys are all fired up. You spicy, Brittany. I told you I'm a middle child. Come on, you know has problems. I want to get into living benefits with you guys. Does that sound fun?
Yes.
All right, because it continues our conversation of how good we are. And that to me is just all it needs. It's all it needs to be. Okay, so let's actually start this conversation with why living benefits are still really important to talk about. Because if you feel like you've talked about them too much because you've been doing this for 5 years, 5 days, oh.
Talked about it here. You're going
So, you can never over-talk living benefits. Let me just summarize.
Yeah.
Dementia, cognitive impairment, boom, boom, boom. That's another thing that's drastically impacting us post-COVID. Okay, so understanding what COVID did to the fear and the medical side of our industry will help you excel relative to your competitors down the street. Because all they're talking about is caps and cars and the market and Trump and tariffs and yada, yada, yada. If you can talk to them about something that actually means something, you're gonna be a different agent to them.
That's
You're gonna be a life coach, right? So go in there with something different and something unique. National Life Group has been doing living benefits, really in our entirety, but we've been promoting them since 1937. And I'm gonna read this to you guys, because I really need you to understand how good we are. Oh, I was so good, I opened the door with my mouth.
Yeah.
We heard you, we heard you.
All right, so this ad is from 1937. It says, in plain language, your life insurance may serve you as your savings fund, trust fund, loan headquarters, emergency reserve, and looking ahead, it will serve you as a source of guaranteed income.
Wow.
1937 for your retirement years. Here are but a few of the living benefits which a company like National Life of Vermont offers through life insurance. Guys, I don't have a Snoopy dog. Tom Brady doesn't sing my jingle. There's no golfers with my logo on their chest. But I have something that my other carrier partners have never even, they weren't even born when this ad was created. So when we talk about living benefits, when we talk about what's happening in America today, when we bring all of that together, it's to help empower you to go make a difference.
Come on.
So let's get into exactly what those benefits are. And you may notice, why is this like this? You may notice that I'm going to talk some smack. I love it. I love it. Here we go. Cool. So this is our living benefits lineup. This can actually be found on our wall. How many people have seen this?
Yes, I see it.
Oh, that's fire.
It's on the website.
It's on the website.
I'll tag him on.
Here's the thing, guys. These writers. So, and that's why, and I'll tell you why California is hard in just a minute. Which we all know, but I'll get into it.
Yeah.
So, the reason I'm telling you that is because as you're educating each other, and if you're educating some friends and family, I don't mind if you use something like this. Just don't them. And don't allow them to take pictures of it. Just use it for your own usage, and it helps people I'm a visual learner, personally. I need to see something like this to understand the impact.
Yeah.
And here's why. It is so easy for clients to try to tell us what they know and why what they know is better than what we know.
Come on.
So easy. So what they do is they go, oh, Brittany, I don't need that, I have living benefits already. Because their agent from 20 years ago told them they had a terminal illness rider. So sometimes it takes pulling this bad boy out and saying that you don't have the new kind, right? Or you don't have the upgraded kind. This kind of helps put things in perspective.
Yeah.
So if you have to use it, just walk with caution. Okay, so here we go. National Life Group. Terminal illness with National Life is an illness that results in death within 24 months or less. Why is this important? Look at all those competitors that say 12 months or less. So if I have an illness and I go to the doctor, and the doctor says, Brittany, you have something only Meredith Grey from Grey's Anatomy has ever discovered. And you have 18 months left to live. Okay? If my policy is with, I'll use PAC because they're local. If I have a policy with Pacific Life, can I get money from them?
No.
No. PAC would say, tell your Benny to come back when you die. But that's all they can say. They can't help me, right? They can't help me. And by the way, even if they could help me, they're gonna give me 75% of my death benefit up to $250. So if I have $1 million policy, I can't even scratch the surface, right? This little area, my friends, is called the bold print giveth and the fine print taketh away.
Wow, that's fire.
I have a lot of singers. So,
Preach.
I'm saying that
Bars,
because
bars.
again, it goes back to no benefit is created the same.
Hey,
So just because you think you have something,
bars.
let an advisor, let someone who specializes talk through you.
Let's go, Denzel.
So, that's terminal. Chronic illness is an inability to perform 2 out of the 6 activities of daily living, or, did you know the or? Okay, inability to perform 2 out of the 6 activities of daily living, or. You guys have been selling these products? You don't know, right?
Wow, Kevin.
That's weird. Guys, when we become really close friends, I'm actually gonna quiz you on this.
Whoa.
I will, because if you can't tell it to me, you're not telling it to your client. Or cognitive impairment.
So, that's,
Cognitive impairment.
¿Qué es eso?
Let's talk about why.
Oh. Ya no, ya tú sabes. Ya ahora aquí, ahora sí tú sabes.
Let's talk about why I care about the or so much. Let's really break it down. We are experiencing something called a sandwich generation right now.
Whoa.
Okay, and guys, this actually gets pretty serious. So, the reason it gets serious is because infertility is up by about 300%. So I'm 36. I could have my first child when I'm 40. Well, my mom is going to be in her 60s, and she has early onset dementia. Then she is ailing, right? She's not able to turn the stove on or remember her name, and I'm taking care of a newborn. This is what's happening in this country. It's on the cut. It's all going to break in, right? And here's the thing. It worsens from there, if you can believe it. Because I'm the favorite child and I live in the warmest state, my mom is going to come live with me, right? So I have a baby and my mom lives in my house. And my husband is like, I didn't plan for this. What is the leading cause of divorce?
Financial.
Money.
money is money.
So my mom getting sick, me struggling with fertility, could equate to a divorce.
Wow.
That's not what we planned on. No premarital counseling gets you ready for that.
Wow.
All I needed in my family unit, all my mom needed, was a policy that covered her for cognitive impairment.
Wow.
Do you see why or matters?
Yes.
In this country specifically, we are having massive fertility issues. So understanding the problems in the sandwich generation, which affect men and women. This is not a female conversation. It is a holistic conversation. Because again, yes, it's my mom. Yes, I'm the one having the child. But it's him as my provider, as my husband, who is also deeply impacted. So when we look at the accelerated benefits, having the or is everything.
Amen.
Okay, so Chronic illness is an inability to perform 2 out of the 6 activities of daily living or. Say it with love. Thank you. So, at National Life Group, we do not require a permanent chronic disability. Again, bold print, guys. The reason this is important is because if you had something called a Bell's palsy, which is a stroke, where you can lose 10% of your function or 100% of your function, but you can get better. You need certain treatments and doctors and medications, you can get better, okay? If you had Pac Life's policy where it said permanent, because you have a chance of recovery, they could say, you're good.
Wow.
No, thank you. Okay? Permanent matters. During COVID, we had clients who had COVID so severe, they could not perform 2 out of the 6 ADLs for 90 consecutive days, right? That happened all over the country. We were able to offer them money, where these carriers wouldn't, because it wasn't permanent,
Take them down.
right? So, keep in mind, again, all these little pieces of information. So critical illness, there's 13 triggers, but I'm gonna talk about the major 3. Heart attack, stroke, cancer. Blindness, ALS, all that stuff is in there, but most people don't resonate with it. Heart attack, stroke, and cancer. Those are the 3 biggest illnesses of our country, and certainly cancer is one of the longest running illnesses we've ever seen, right? When we get to heart attack, stroke, and cancer, 6 major insurance carriers aren't even in the conversation anymore. They've left the chat, as the cool kids say. So, guys, New York Life, who I used to work for 1 year. Yeah. New York Life is here. They're the only company on this slide older than my company. So we've been in the game the same amount of time.
Come on.
And they haven't figured out how to price in cancer coverage.
New York who?
So, the reason I bring this up is because when you are sitting with someone, especially if you're new to the industry or if you're new to sales and you don't have your confidence yet, I'm trying to instill confidence.
Yes, thank you.
Because when that client says, no, thank you, I have it, I want you to have confidence from this conversation that they probably don't.
Wow.
Yeah.
I want you to walk out of here and go, you know what, they're probably lying to me. And they don't know they're lying, right? It's an unconscious lie. This is what they believe that they were told 20 years ago. So have the confidence to say, let me just review it for you.
Wow.
These are updated, you just say, wow. That's a lot of wows, dude. I should be like a check on that. And I am not policy up here. I was just like, that wasn't even exciting.
That was fire.
Okay, I know there's like more things. So anyway, the reason I bring it up is because I hear all the time, people say, well, I tried to tell them, but you're not confident in what you're selling.
Yeah.
Because they can't be able to talk it out of you.
Come on.
Think about it this way. If I, because I'm not putting any omens on anybody today, if I walked into a cardiologist and I have a heart problem, I'm not gonna look at the cardiologist and say, I've done all the research. I want this medication, this treatment plan, this time. No.
Yes.
They're gonna look at me and say, here's what I recommend, here are your options.
True.
What feels comfortable. We always let the client flip the table on us.
That's right.
Because the TikTok told them, and Robinhood told them, and YouTube, and they watched Patrick's podcast, and he told them. It's about here, and it's about you being the expert.
That's right.
So what I'm trying to show you isn't because I want you to have it memorized by the next time I see you. It's because I want you to walk out of here and go, I'm selling something they don't understand, and I have to show them why it's important.
Yes.
So then, critical illness, critical injury. This one's fun. Critical injury. Coma, paralysis, severe burn, traumatic brain injury. Okay. Think for a moment. We're gonna have a little back and forth here. Think of jobs, occupations that have or could have coma, paralysis, severe burn, traumatic brain injury.
Wow.
Go.
Construction.
Firefighters.
Welding.
Electricians, roofers.
Architects. No, not architects. Oil
No, they're on the contractors, construction.
That's a white collar.
What are you talking about? It's any single job with a slip and fall.
Yeah.
The
Really?
reason I say that is because we're underwriting for hobby, not occupation. So that opens up your game a little bit.
Bodybuilders too.
Any person whose job could impact them is still available to get these rider.
Yes.
Coma, paralysis, severe burn.
Wow, that's good.
Here's the thing though, friends, because I'm always being recorded and listened to.
Hey.
Hey, guys. You cannot walk into a firehouse or a precinct or a military troop and say, hey, all of you will get this. Okay, National Life can't have that much dense risk in one spot. No carrier can. But what you can say is, I represent a company that has this rider, and if you qualify, it'll be on your policy. So the education, the awareness. There are plenty of people who sell this to the military. And to other jobs. It's the hobbies that are our concern. So if you like to go motorcycle riding once a year in the French Alps, we're probably not gonna cover you for that, right? This is something totally different than that. Also athletes, okay? So think about college for a second. There's two reasons college athletes don't go pro. Talent and injury, okay? And if you're injured, unless you're going to Duke or some D1 school, they're not gonna pay for your injury. What if instead your 18-year-old had an IUL policy with accelerated benefits on it, and if they got injured on the court, you could use that to pay for it? Okay, so college is a big one too, or athletes. Last but not least on here, we have Alzheimer's disease, and then I'll get to Alzheimer's disease and Lewy body dementia. So I just talked to you guys about cognitive impairment. How is this different? With this, because Alzheimer's and Lewy body is non-recoverable, we're just gonna give you all the money at one time. So it just gives a lump sum distribution of the money. With the chronic illness up here, you just have to requalify every year to prove that you're still sick, because we don't require permanence. You just have to prove you're still sick or sick or in cognitive impairment to get that every year. With Alzheimer's, we're just giving you a lump sum because it's not recoverable. So these are all in the product. Term, whole life, IUL, fixed UL, doesn't matter. It's all in the product. Built in, priced in. They're tax-free when they get paid out. You guys might be thinking, how is that possible? They're covered by tax code 101G. It's an actual tax code. We will send them a form, I forget the form number, in the mail, and that's only so they can prove to the IRS they didn't steal or embezzled money. It's literally a form that just says it was provided to them by an insurance company. Because when somebody gives an extra $400,000 in their bank account overnight, the IRS notices that. So they are tax-free. They're paid out upon the sickness or injury. And the last thing you have to remember is you have 365 days from the date of diagnosis to make your claim. Okay? Not the date they got their treatment, not the date they discovered the limp or whatever. From the date of diagnosis.
How many days?
365, 1 full year. Now here's the thing. They can come to us immediately and tell us about it, but they don't have to take money right away. They can say, like for cancer, for example, it could be stage 1. They might want to wait in case it progresses to stage 4. And then they would take their claim, right? So you don't have to take it immediately, but you have to make us aware of it within that year. Does that make sense?
Yeah.
A little bit?
Yeah.
As much as I can?
Yeah.
You got a question?
Yes, so like, because I know a lot of construction workers, what qualifies them for that critical injury?
Just being human.
Just, okay.
Yeah, yeah.
So
It's
is that
just-
about like their health or?
Well, they have to, as long as they can
Qualify with.
qualify for the insurance,
Yes,
then yeah, they'd be good to go.
okay,
Yeah.
is there any special thing that I would have to add to their policy, or it just
Nope.
comes right
It
up?
just goes right in. What we'll do is we'll notice if, for example, if it's a full construction company, we'll see through employment how many people we've got. And if we feel that the risk is too high, we'll limit it. But other than that, no.
Okay, so, okay, so I can even offer it to like companies?
Yeah. Because they're just buying a life insurance policy and that's just a rider on the policy.
And how would you, kind of present that to the owner? Like, I mean, obviously it's a benefit to the employees, but,
Yeah.
how could it benefit an employee?
That's a great question. So in the employer's mind, it could be what we call golden handcuffs. So because they're offering a benefit that's unique to any other construction company out there, it would keep the employee longer at the helm of the company. Employers, if they have the right sort of accounting unit or accounting departments, can also pay the insurance premium or pay for half the insurance premium if they want. So they can participate in helping pay for it if they want to. It's still owned by the individual, but again, it creates an added benefit. So when you think of an employer's benefits package, we often just think medical, dental, 401k, right?
Yes.
This would add a fourth that would be unique to that company that they wouldn't get at another construction company. So from an employer perspective, maybe there's no tax breaks or anything like that, but it's a retention product. It keeps those people with them, it keeps them. And if you're a small firm, you might want to just keep the family spirit there and offer that sort of policy, right? So that would be how you would offer it, maybe in that group zone.
Okay.
And we can list build it. So the way that we would do that is, let's say the company had 20 employees, we would send one big bill to the business that would either be paid for by the business or by the employee, however we do it. But we can help with that. We have an advanced markets team that would navigate that with you.
And it's not, you said that, they can't write it off as a tax?
No, it wouldn't be a tax break in this particular instance. Those are different types of structures.
That would be, key person insurance?
Right, like a key person policy, you know. Yep.
Okay, thank you.
Yeah. Okay, so I could go on for like literally hours and 38, and 9.
Keep
What
going.
questions, what thoughts, what?
So I saw that the last two, critical injury and below, the rest of the competitors, they did not, they do not offer it or?
They don't have it.
They don't have it. So critical injury, and I was like, yeah, because I know that Alzheimer's, it just got introduced last year, correct?
In California last year, but it's been out for about 2 years across the country.
Got it.
Yeah. So in California, I'm glad you brought that up, because I wanted to explain this to you guys too. In California, you guys, we're experiencing something called a specified disease statute. Yeah, I know, very fancy. So the reason this exists is because in California, you get life and health licensed at the same time, right? And so what a lot of agents were doing, they were very proud of this, is they would walk up to a client and they'd say, okay, you can get this medical insurance policy for this premium, this deduction, yada, yada, yada. Or you can get this life insurance policy that covers you for benefits.
Come on, man. What are you doing, man?
So yeah, so you can get this medical insurance policy, yada, yada, or you get this life insurance policy that will leave money to your heirs, cover you for cancer, and it's like a souped up IRA. That's how they were selling it. And so, which one were the customers buying? The life insurance. Which one paid more commission? The life insurance. So California stepped in and said, for any insurance carriers that want to sell something with medical benefits that is not medical insurance, they have to be more scrutinized. So basically, here, you have to use very specific language in these to not mislead the client about it being medical insurance. This is the only state that we have to ask on the app if your client has medical insurance. And that's why. Because we need to be able to prove to California that we're not being chased. So it takes longer, the whole point of saying this, it takes longer to get things approved because the verbiage has to be really specific for the state to approve it.
If they don't have medical insurance, is that an automatic denial?
Not necessarily, like they see it terminal, chronic, and critical, but they won't get maybe like critical illness, but I don't think they get injury or Alzheimer's or something like that. Because you have to file it with the states, and because by the time the statute came out, these already existed in California. So it's just kind of relevant to that more so than anything. That's why a lot of carriers don't have chronic though. They have, the state took it away, because of how they were marketing.
Would that only be for California? Like that they have to have medical insurance in order to qualify for everything?
Yeah.
Outside of California, they don't have to have medical insurance too?
Yeah, the other states haven't mandated it.
So like I had a client who recently, I just got approved and she doesn't have medical insurance. So in the case that she gets medical insurance, can I contact her? Oh, and she'll have all the new.
Oh, okay. That's good.
Does she have? Does she have to go through like medical inspections? No?
Yeah, right.
No, for us, it's literally us checking the box for the state.
Got it.
Because we've already done the medical underwriting. We already see their health, because what we're underwriting for is mortality. So here's the thing, and this is the interesting thing about an underwriting mind. Underwriters are not doctors. Doctors are just trying to keep you healthy tomorrow. That's their whole game. Like, it's just getting you healthier tomorrow. Like, it's not making sure you live to 90, it's making sure you live to next week. What underwriters are looking for is not how healthy you're gonna be in a week, how healthy are you going to be for how long? So they're assessing your longevity. So for us, we've already done the medical underwriting. We already know how long, in essence, that person should live to if all things go well. But for the medical insurance card, it's because the state needs to make sure that we're not overselling living benefits as medical insurance. It's a state auditing thing. Yeah, so that's why it takes longer for us to do anything.
Could you go over again the cognitive impairment versus Alzheimer's?
Yeah. The simplest way to look at it is anytime someone is gonna get a chronic illness benefit, what happens is, like, when I go today, which is, what's today, the 28th, July 8th. So I go today, my doctor says I can't perform 2 out of the 6 ADLs, take it nationally. They're gonna give me 12 months of payment up front. So they're gonna give me 24% of my death benefit up front. Once they pay that to me, I go back July 8th of next year, and I prove that, my doctor helps me prove that I still can't do it. So then I get another 24%. And then I keep going until I exhaust it. If I get better though, let's say I only took it for 1 year, but I got better in year 2, then I just have 75% of my death benefit existing as a death benefit, because I only took it for 1 year. What Alzheimer's is saying is that's not recoverable. Why are we gonna make someone prove over and over again they can't remember things?
Oh, yeah.
So here's a lump sum of all that money.
And now, if you get a portion of it and then you do recover, that's still non-taxable, there's
Correct.
no retroactive,
Nope.
nothing, okay.
Mhm.
Good.
Yep. Here's the thing, the reason accelerated benefits were created is we want people to get back to their longevity. So if you, if you have heart attack, stroke, cancer, whatever, no, you're good, you're good. If you have an illness or injury, so think about me, again, I'm 36. So I'm elite rate class, with an elite, I'm expected to live to my age of 90. That's the hypothesis with an elite rate class based on my age. Let's say I have a heart attack, okay? Instead of living to the age of 90, that heart attack has now moved me to 75, right? Just the severity of it alone has basically shown mathematically I won't survive to 90. The idea behind the accelerated benefits is that National Life is going to basically infuse money into my house that I can use for experimental treatments, medications, modifications, or just to pay off my house and have less stress. That then would tell you that I could gain 7 years back. So now instead of, maybe I'm not living to 90, but I'm not gonna die at 70, 85 now,
Yeah.
right? Like I'm buying back mortality basically, because I'm using better practices in my home or able to pay for treatments I otherwise couldn't have. A lot of our, our clients that have used this have actually done experimental treatments in other countries that their insurance wouldn't pay for. So you can use this for anything. But yeah, so we're hoping this money gets you healthy again.
Right.
That's the idea behind it.
Is there any way that you can use your living benefits for someone else?
No. No, because it's all based on your mortality. Yeah. I mean, the only way would be that you got sick personally and you gave it to somebody, right? But like somebody else getting sick, you can't use that.
Or you can take
Damn,
the
I
money
got
from
sick
it.
from my dad.
Yeah, we can't, because all of the charges for it are based on you, the person.
What happened if the person, like, meeting, you know, we said it's 365,
Mhm.
notice what can happen, like, to pass the time? If they didn't notice.
Yeah, if they didn't
Say they
see-
have like a really like chronic, or critical illness, and then they reported like within those 365 days, like what happened? Do you have any?
We just won't pay a claim.
Right.
We won't pay on it. We have to just know that it exists. They don't have to, again, they don't have to pull money from us, they just have to tell us that they have this problem, this illness or injury within that time frame. And I think some of it comes down to like the time value of money, right? The inflation and things like that that can happen. Certainly our books have to be buttoned up by December 31st, there's a lot that goes into it. Fraud is really big. We've definitely had people defraud us out of these benefits because they pretend to be sick and they get a doctor friend to write a note, right? So we've been definitely defrauded. So there's just, you know, timeline elements from that perspective. They just have to tell us. Like, I know of a client right now who told us about 6 months in from her diagnosis, she still hasn't taken the money yet, and it's been about another year.
Yeah.
But we know about it, so we can make that payment when she's ready. We just have to know it exists. That's it.
It's another incentive to, you know, stay in touch with your clients.
100%. 100%. Because they will undoubtedly forget about this. Because many of them are purchasing this, as much as they love this in the sales process in the moment,
Yeah.
all they're thinking about after the lease is compound interest, right? Tax-free retirement. And when they're using a mobile app on their cell phones, all they're looking at is their interest trading strategies, right? So we have to keep it tangible in some way, but they're never gonna remember this without you. your question, or you just?
Yeah, so it doesn't matter what policy you get, it's embedded within all of it, that you get these type of benefits.
Absolutely. So the only way they will come off the policy, which is a great question, the only way they will come off is, there's actually two. One is an underwriter takes them off for risk purposes. What I mean by that is, let's say I have a family history of Alzheimer's, okay, by the time I'm 50. Well, if I'm only 36 today, and my family's been getting it by the time they're 50, I would be too risky, I would need it too quickly. Whereas Alzheimer's traditionally is needed when you're in your 80s. So that I would be deemed too risky because it would be coming sooner than it's supposed to, just based on family history. Or sometimes medication, sometimes weight, sometimes other things, right? That's the time they'll take it off, if you're deemed too risky. However, you can change, if it's not family-based, if it's you-based, if you change your health, you can actually get these added back on. So if you get one removed because your medication made it risky, you get off that medication, your heart rate's good and all that jazz, you can actually have it put back on. So there's that. The other one is substandard rate classes, automatically they fall off. Okay, so then all are different ones. I couldn't even, like terminal is always gonna be there, but like, I think it's like table 4, this one comes off, and table 3, it's like something like that. But they will naturally fall off in the software. So when you run an illustration, if you put a table rate in there, it removes the writer for you. It knows. It knows it's gonna fall. So those are the only two ways. Substandard and underwriter removes it intentionally.
I wanted to know, you mentioned earlier that there was X amount of dollars that go unclaimed because of the beneficiaries. How exactly, because, and correct me if I'm wrong, obviously, but does the insurance company ever reach out
Yes.
to a beneficiary?
Yeah, but if we can't find them,
Oh.
yeah, if we can't find them. I mean, you gotta think too, number change, email,
People pass
maybe
away.
they're in like witness protection now, I mean, you never know. Or you can't, yeah, they moved to a different country.
Yeah.
And you can't keep track of them. And you have to think too, like back in the day, we get more data now than we've ever gotten on Betty's before. We didn't used to get this much. We're so old, we have a whole bunch of clients, we don't even have the clients' phone numbers.
Wow.
Because we didn't require them, right? Like, that's how old we are. So we lose track of them, we can't find them. If we also can't find the deceased in the obituary because the family kept it private, then we don't know that person's even died. Right? Because they can just stop paying premium. It can happen. So it's often like, I don't know if you guys do this in California as much, but in like Vermont, we have state fairs. So you go and there's like a big tent called unclaimed property, and there's binders with people's names in them. A lot of that's insurance money that people have claimed on.
Wow.
And like Marco, I think, or Dan looked it up last week, it is like $1 billion. Yeah. And here's the thing, like, we can't do anything with that money.
Yeah.
It's not like Miron doesn't have a jet because of it. It is literally sitting in a portfolio account. Waiting.
Database where you can go in and check. Yeah, here in California.
Oh, yeah. You guys, you might have some money out there. You got a 16-cent check, you don't even know.
We're up to
And then, I know this, but I want to hear it from you. But when you have a child as a beneficiary,
Yes.
what happens when the insured dies?
We cannot pay anybody under the age of 18 any money. So we have to hold on to it until they're 18.
So now, I don't know if this makes sense, but if for the example of IUL, for example, right? Does that continue to accumulate until the beneficiary can claim it? Or is the opposite when they die?
Oh, it will accumulate, but if the insured has passed away and they left it to their child, like let's say it's me, right? My policy I've paid for 20 years, I passed away, nobody knew I had it, right? Well, now there's no more premium going into it. So National Life has to use the cash value to pay for the policy that's in existence. It will probably implode depending on my age when I pass. But yeah, it would theoretically, it would continue to create compound interest until it's claimed up.
So if you guys can't pay out anyone under the age of 18, and they don't have, they're not listed as a contingent, but as the primary beneficiary, what happens between, let's say they're 5? What
It
happens
goes into a
between-
compound account, goes into like a portfolio that we, like an escrow account essentially that we put on to.
So can the beneficiary then claim it at 18?
At 18.
At 18.
Yeah, we legally just can't.
If she has information.
Correct.
If the beneficiary knows, right?
Right.
But it's not like you guys 13 years later are gonna be like, hey,
No.
by the way,
No. And then by the way, maybe that 18-year-old married and or changed her name or whatever, who knows? So if you are working with somebody who wants to leave their policy to their children, they should have a trust.
You put it in.
That money needs to go to a trust, and that trust will then pay the child,
Yeah.
right? Because that's just how it should be set up.
Yeah.
We just can't legally pay children money.
Yeah.
Because can you imagine a 10-year-old? So you should be educated. Another thing, guys, to consider, since we're on the living benefits conversation too, is you should always have a power of attorney for finances on file in families. How many of you who are married or have spouses have a power of attorney for finances in your home? We really need to, because if you're in a coma or incapacitated, we can't just give your husband authority to do anything to your product. So it cuts off access to the policy. So and it's not just national, like, it's across the industry, right? So that's why the POA exists. And you should have one for medical as well, because if you're incapacitated, your spouse should be able to help make medical decisions on your behalf. But those two things really should be part of financial planning, in general. Yeah, on top of a trust and a will. So those are 4 big documents we should be working on.
Do you guys offer trust?
We do not. No, we have like some documents online that help people understand what verbiage around the trust should look like, but we don't have anybody on staff that actually puts that together. I don't know enough about PHP like resources, but many of the other agencies I work with actually have trust companies, the vendors that they use. Like there's one called Wills and Trusts, literally. So there's different things online.
Okay. Thank you.
But putting a trust together for family units specifically is monumentally important.
Back to the case of a minor, so
Yeah.
let's just say, how long would the individual have to contact National Life Group? You know, obviously they can't access their money under the age of 18, but how long would the person have to contact saying, oh, hey, okay, I understand and everything like that, I'm aware, would it be until they're 18 depending on their age, or how would it be?
They should be contacting us right away, because again, you run into the risk of the policy imploding if we don't know the deceased has passed. So we would get contacted right away, we would take that death benefit, let's call it $500,000, and we put it in that compound account, like an escrow account. They would sit there, and they'd have to call us back when they're 18 to
Okay.
retrieve it. But they would start the process as soon as the deceased is passed,
Okay.
and then we would put it in action.
You mentioned earlier too, when someone asked a question, you gave the example if, you're 36 and then Alzheimer's runs in your family. Are you guys underwriting every year or something like that? Like, how do they know that at that age in your life, this is now?
Well, we ask family history. We ask about your parents.
Also, that was an example, that was when you were getting the policy.
Correct.
Oh, okay.
Yeah, they can remove it at time of pending, right, when they're underwriting, because on the app, it asks about your parents. If
Yes.
both parents have had Alzheimer's by the time they're 50,
Yeah.
then that makes me risky
Yeah.
to Alzheimer's, right? So it's just information we immediately have.
I thought it was like during the policy in life, I'm like, oh damn.
No, no, no.
You're sneaky.
No, we can't, we legally
Okay,
can't.
okay.
Once it's bound, it's bound.
That's it, right?
I will say too, on that note, when you asked about if it's on all the products, so it's on the term, for example. And one of the things I highly recommend if you're selling term policies, which by the way, our term policies are phenomenal.
Yeah.
If you are selling term, then you should always convert into permanent before you take out your accelerated benefits, because you get a better cost break on the APRs. So I know that seems like a lot, we'll get into it at a different meeting, but, because it's late to go into that, like my brain is not functioning. I literally got back from Italy yesterday, so I don't know how I'm late. Also, this is the hardest I've worked today, so I'm surprised I remember all of this. But the reason I'm telling you that is because it's on our term, and the way that the benefit gets paid out, it's more costly to take a benefit from term. So you can actually convert into the permanent while you're sick and get a better living benefit payout. So that's the cool thing about our term, if you're not familiar with it. Our term has the best conversion, and I will say it, the best conversion in this industry.
Yeah.
So I have a 30-year term policy. I literally do. I have 20 years left, or 20 years to convert it. If I gain 200 pounds, if I take weird medication, if I get cancer in the meantime, and I go to convert it, it's guaranteed convertible. So I get to walk into my permanent policy, no matter how sick or injured I am.
So you can convert it at any time? I thought it
Yes.
was up to 10 years.
No, 10-year term has 10 years, 15-year term has 10 years, 20-year term has 15 years, and 30 years.
Yeah, when you get all the
Consideration.
registration and tell us. where
Yeah.
Oh, okay, okay.
And you can convert all or a portion of it. So you don't have to do Like my term policy, my husband and I both bought them, when we bought our condo. We actually started in Woodland Hills together. We weren't even engaged yet, but I was making sure that guy had a policy.
That's right.
And, so, anyway, we both have 30-year term policies at $500,000. And so now, when we have our first child, and I wanna like, kind of convert out a portion just to keep for that kid on the side somewhere, I can take $100,000 and just put it over there. But I get to keep my rate class. So I was an elite when I got it, so even if I don't convert it till I'm 50, because I have that 20 years, I'll still be elite at 50.
Your premium will just change.
Right. But I'll still stay my healthiest class.
Nice.
Yeah.
So I had my first term when I was 23 and I had a deep grade.
Hey, $1 million baby. I don't know whose hand was up first.
Me.
So you,
Last two questions, I know you're
No,
answering
I'm good.
so much.
Alright,
So
I'm excited.
so basically you're saying you can choose the amount that you wanna convert?
Correct.
Okay.
But it has to be relative to the size of the policy. So my policy is 500.
I just need to make sure.
That was a weak question.
You don't have to make
You can't convert more. You cannot convert more.
Oh, you can't?
No, so if my policy today is 500,000, I can convert up to 500,000.
Okay.
So make sure. I can't like 7 figures million. Yes.
Okay, so back to the kid thing.
Okay.
If they're a rider on, let's say, your kid is on a rider on your policy, let's say something happens to them, like they break their leg or they get third-degree burns, like God forbid.
Yeah,
But are they able to access any of the living benefits?
that is a phenomenal question.
Thank you.
Great question.
Children's term
I bet
rider,
you already knew the answer.
No, I didn't.
children's term rider has no accelerated benefits.
Damn.
So, the reason I say it's phenomenal is because that is why you should always be selling IULs to children. It should be its own sale.
So-
It is affordable enough, cost of insurance is never going to be lower in their entire life. And you will have accelerated benefits on it. So children's term rider does not come with accelerated benefits, period.
Another great question.
Another.
So I'm converting over a term, right?
Yeah.
But now if you were to have 500,000.
Yeah.
Can you only convert once, or can you
No,
convert?
as many
like-
times up to the 500. Yeah. So I can convert 5 times or 10 times, it's just up to. Once I
I'm just curious to know, like, how many people,
know all the things I know now.
no, I wonder how many people, borrow from their IUL. Not
Oh,
people.
statistically, you mean?
Yeah,
That's a great question. I was once given a number of how many withdrawals we currently had out. I don't have that number off the top of my head. I would say it's probably statistically lower than you think, because most consumers don't realize they can do that. It takes education. Most people still think of life insurance as death only.
Yeah.
So we need people like you guys to explain to them that they can access these policies how and why. And that's where the mobile app education comes into play too, because they can take it on the mobile app and repay it on the mobile app. But I would say it's less underwhelming than you would think it is.
Yeah.
During COVID though, we saw a huge spike, because people were using it to pay their bills. So,
Okay, that's it.
So, I know you can lower your,
Yeah.
I know you can lower your death benefit.
Yes.
On IUL.
Yes.
I think 3 times, right?
24% of the time, so yeah, basically.
So, when you do that, does that mean that the majority of your premium now is going to a special commission because you're lowering?
Correct. Your fees are now lower.
Okay.
Your cost of insurance, is relative to the size of the death benefit, and the expenses on that death benefit are now all smaller. So you have more money going basically to interest crediting.
That was another great.
That was a good question. That was a good question.
Am I not killing it? I'm so proud of you.
Only question. Should we take out all those carriers away from the wall? Can you do that?
I wish, you know what,
Fred.
I hope you guys understand a couple things.
We gotta take
One,
all the carriers away, just leave them.